everyone is ignoring the Bitcoin miners in this latest price movement of Bitcoin. And to be honest, you'd be foolish to do so. Less than 10 months ago, one Bitcoin was nearly $70,000. Fast forward to today and we're around $20,000 or $21,000. Now, most YouTubers and influencers will tell you that it's because of the overall bear market that's crypto right now. To truly understand the price actions of Bitcoin recently and where it might be heading next, you need to understand what has been happening to those Bitcoin miners. See, Bitcoin miners play a huge part in the price we see for Bitcoin. And there are 3 reasons why right now Bitcoin miners are dramatically affecting the price of Bitcoin and why the next bull run could be a while off yet. Now, unlike all those other crypto influencers who won't tell you what those 3 reasons are and try to string you along for as long as possible to improve their chances of hitting the algorithm, we do things a little differently around here. I'm going to tell you up front, and in return, you're going to hit the like button for me, which seems fair, right? So the 3 factors that are affecting Bitcoin miners right now are hash rates, electrifying energy costs, and over investment. Each of those individually have put pressure on miners to the point where it has had a direct impact on Bitcoin. But collectively, they've put incredible pressure on Bitcoin, and you might argue them as leading factors in this bear market that we're currently in. Now, you would be right for thinking right now, how does overinvestment affect Bitcoin miners? Well, I can tell you it's nothing to do with people investing in Bitcoin for the long term. It's instead to do with the price of these things. Before we talk about those 3 factors and how they each affect Bitcoin, we need to first understand why you should care about Bitcoin miners. I mean, doesn't everyone just think that they are 40-year-old sweaty men who sit in the dark room and do some mad maths calculations to get some free Bitcoin? Okay, maybe it's just me. No, for real, miners in every bull and bear market for crypto so far to date have had a direct effect in the Bitcoin market. People just choose to ignore that fact because inflation at 9% is way more interesting to talk about, right? But here's the thing, miners hold their Bitcoin in the bull market and get forced to sell in bear markets as their margins, i.e. how much they actually make, get squeezed. Think about it another way, right? Those miners are not 40-year-old sweaty men as I described them 20 seconds ago. They're multi-million-dollar companies which have thousands of supercomputers which work to complete complex equations to unlock their Bitcoin. The multi-million-dollar companies are set up for the one reason, and it's the same reason someone owns your local franchise McDonald's. It's profit. When the good times are good and the price of Bitcoin is going up, just like you and I, they hold that Bitcoin, hoping that it will continue to rise and they can make even more on their margins. On the flip side, in a bear market like right now, the sales price can drop so much that it's now impossible for them to keep up paying their costs unless they sell off their Bitcoin. And that leads us to our first factor, Bitcoin hash rates. You can think of this simply as the computer power on the Bitcoin network. It's the speed at which the Bitcoin network processes data when adding new transactions to the shared ledger. And each miner has its own hash rate. Why is this relevant? Well, when Bitcoin was first created, it put a hard cap on the number of tokens it would allow to be minted as 21 million. This was back in 2009. Fast forward to 2022, and over 90% of that 21 million has now been minted from those miners. But each token that is minted, the next gets harder to mint. Think of it like diamonds. The more and more we discover the existence of diamonds, the fewer and fewer there are out there because there's a finite amount of diamonds in the whole world. Now, with difficulty to mine Bitcoin increasing, this is okay when the price is also increasing, but when it's coming the other way, miners start to unplug their computers and start to leave. The incentive to mine decreases and people move on to the next big thing like banana NFTs. And that's exactly what's happening right now, okay? Not the part about the NFTs, but hash price is now at its lowest since October 2020. Now, hash rate means nothing unless it's coupled with factor 2 being electrifying costs. If you live in the UK, like me, or to be fair, anywhere in the world, you'll know that electricity and energy prices are going through the roof. I literally got a text 30 minutes before I sat down to record this video to say my electricity and gas bill are expected to increase by 50% in October. That's after another previous 50% increase just 3 months ago. Now, I know you don't care about my electricity bills. I get that. But what I'm trying to say here is everyone is affected by these price increase, and none so much as Bitcoin miners who run these supercomputers which draw on huge amounts of electricity to run their operations. In simple terms, if the price of electricity goes up, profitability of miner operations goes down. Hopefully the same correlation is not true for this YouTube channel. To prove it's not, make sure you hit the red button below and help a inflation fighting YouTuber out. Bitcoin miners have very few variable costs, and the biggest one is likely to be electricity. Each miner will have a price electricity cannot go above, or else it's no longer profitable for them to actually make any money from mining. Listen, I'm not going to claim I know what level that is, and really it will depend on what type of equipment they have, but when prices increase by 50 or 100% in such a short period of time, it can be quite easy for miners to no longer be profitable, especially when you factor in that increasing hash rate difficulty. So what do these miners do? Well, they sell their tokens and move to banana NFTs. If the situation gets real bad in terms of price of electricity, then those miners might sell their equipment or even their Bitcoin holdings to try and recoup their losses or to pay fixed costs that they have to pay no matter what. We can see at the moment things are bad, and we're seeing inflows of Bitcoin from miners to exchanges, which indicates they are selling their holdings of Bitcoin. Now, this behavior has cooled off a bit, but this doesn't mean they still aren't under stress and could potentially have to look to offload more in the near future, especially if the Bitcoin price either goes significantly lower or stays at these current levels for a significant period of time. In a week where CPI was announced at 9.1%, being a 41-year high, it is unlikely that these problems are going away anytime soon for Bitcoin miners. So further sell-offs and Bitcoin price pressure could be seen. But it all is not doom and gloom for Bitcoin miners. Okay, actually might be, but it leads me on to my third point, so we're just going to go with it. Affecting them, and it may be the biggest reason of them all for the declining price of Bitcoin, and where the price might be heading next, and that's over investment. Think of investments like this. In the UK, we're lucky if the temperature hits 75 Fahrenheit. So imagine if this July the temperature was only 75 degrees. Not only would everyone not be able to cope, but you could guarantee there will be an increase in demand for ice cream machines. So what is a company like McDonald's going to do? Well, they're going to go out and invest in more ice cream machines. Go from, say, 2 machines to 10 machines. This makes sense, right? Because the demand is going to be there for 10 machines, and the payback on that investment is going to be super, super quick. But what happens if after July, the temperature doesn't get above 40 degrees and everyone wants to go back to buying blankets? Well, then those ice cream machines will become dust machines because they no longer have a use. What does this have to do with Bitcoin, I hear you asking? Well, this is what happened to them during 2020 and 2021. No, they didn't buy lots of ice cream machines, but they did buy lots of high-speed computers and machines because the bull market of crypto meant they were making more money left, right, and center. It is no coincidence you would have seen more videos on people making lots of money from Bitcoin mining during this period. But when you tried to buy the equipment yourself, it was either sold out or the price was sky high. This was because supply was low. Load up your favorite shopping app now and you'll see the opposite happening. Heavy supply and low costs. That's because, as I mentioned, in hash rate and energy costs, Bitcoin mining is no longer attractive. The demand for people wanting to get involved has decreased, and you can make more money if you want to work in McDonald's or you want to sell banana NFTs than running your own mining rig, and that's the truth. I don't like to add complicated crypto or technical analysis jargon that people just don't understand, but this graph shows exactly what I mean. The green line is 30-day moving average, blue line is 60 days, and it's often dubbed as bearish when that 30 days crosses the 60 days like it has done here. Conversely, bullish when the opposite happens. When it's bearish, this indicates that machines are being unplugged at a rapid rate, or you may have heard it referred to as a minor capitulation. All that investment in new equipment is now no longer profitable, and miners begin to sell and unplug the equipment, similar to the effects of price increases in energy, to recoup that money and move into banana NFTs. I've actually got to really stop talking about banana NFTs before it becomes an actual thing. Ultimately though, any miners who are able to survive this bear market should come back even stronger, including some likely purchases of their current competition who are, let's be honest, struggling. For now though, those mining stocks which are publicly traded have been battered by the public to the point where the play might actually be to pick up some higher beta Bitcoin exposure via those mining stocks. Of course, not financial advice, do your own research and make sure that research includes their balance sheet, because we all know what happened now when a crypto stock company has a hole in their balance sheet. Voyager. Hash rate, energy, and investment, 3 things you never would have considered before watching this video, and how they would affect Bitcoin as much as they have. All 3 have put pressure on the price of Bitcoin and inadvertently put pressure on the entire crypto market. Whilst yes, these are not the only factors that affect the price of Bitcoin, it's hidden from most crypto influencers' agendas, but not ours. And whilst your favorite influencer might just tell you Bitcoin is going to the moon next Wednesday, don't forget to check out what those pesky miners are up to, because without them, we never actually get to 21 million tokens and Bitcoin never makes it to the moon.